spend too much time defining my terms, but let me give you my view of the world. I mean, the very first thing I would say about Abenomics, and maybe throw back to my academic days, define your terms. What do you mean by Abenomics? And of course, everybody's heard of the three A's: monetary policy to achieve 2% inflation, flexible fiscal policy to try to secure the recovery and expansion, and then supply reforms to raise real growth. But what I say about Abenomics is, apart from it being a very clever kind of marketing endeavor, it's really a very conventional policy. It's on the one hand using macro policy tools, monetary and fiscal policy to end deflation, and on the other hand using supply side reforms, structural reforms to try to raise real potential growth. Nobody could argue with that. Sounds like good stuff. So it's basically conventional economic policy. But what is sort of not conventional, or what is significant about this policy mix, is the fact that Japan hasn't been a conventional economy for many years. And in my mind, what has been most unconventional about Japan is that it's been in this secular deflation, mild, chronic deflation. Now, that's not necessarily the be-all and end-all. It's not the end of the world. It's nice for me. But it's something that supposedly policymakers are not supposed to tolerate, and it would be good to get rid of. I mean, just to put some numbers on this, people that don't follow this stuff day in and day out. If you look at something like GDP deflation, the overall measure of the price level associated with GDP, that measure in Japan is about 18% below, even with the last year of Abenomics, is about 18% below its peak, which was the second quarter of 1994. So when people talk about the lost decade or lost 2 decades, we're actually right at the 20-year mark of Japan splitting its inflation on a GDP basis. And over that period, it's down 18%, so around about 1% per year. In this country, in the US, in the same period, the GDP deflation is up about 46%, which is sort of what you expect, 1.5–2% per year kind of thing. That that deflation, mild deflation, is also, of course, leads to, or it exacerbates nominal stagnation. So if you look at GDP, which of course is deflation or inflation plus real growth, that is also, nominal, it is real GDP plus inflation or deflation, if I said it the right way. Nominal GDP is also below its peak in Japan. Remarkable. And again, notwithstanding the fact you've had this 1 year under Abenomics, nominal GDP is about 8% below the fourth quarter of 1997. What about this country? Nominal GDP is up 94% in that same period. So there's more than 100% divergence in the nominal value of output since Japan's GDP in nominal terms. So I've, as some of you, Hugh, Richard, Kim, know, I've sort of made a mini career out of criticizing the Bank of Japan, not just the Bank of Japan, there's other policy things to worry about in Japan, but particularly for the deflation, and saying, look, as a central bank, you do have tools that you can use to overcome deflation. You should use those tools very aggressively and do your job. Now, so that's, to me, the biggest significance of Abenomics is this commitment to end inflation and the change of the Bank of Japan. Now, what's significant there? The most significant point, or a point that I would emphasize to really sort of understand what to me is the key point of Abenomics, or at least one of them, is that there was a dramatic change in monetary policy conceptualization at the Bank of Japan in going from Shirakawa to Kuroda in March of last year. Because if you go back to the Shirakawa era, and he was really continuing a sort of a tradition, but he took it to a fine art. He's quite a good communicator, and quite a good deep thinker, Shirakawa. And he was basically running a campaign which said, deflation in Japan, yes, it's a bad thing, but it's not due to inadequate or insufficiently aggressive monetary policy. So don't look to monetary policy to solve deflation. The cause of deflation, according to Governor Shirakawa, was falling real potential growth, particularly rate is lower, and that's leading to deflation. This is not a problem that can be solved with monetary policy. Now, it's just time out on that one. We can debate who's right, who's wrong, but one thing I think is pretty clear, that if you are in a state of deflation, and you have a central bank that is essentially sending a message, we don't believe that we have the tools to overcome deflation, two things follow from that. One is, and I think this is in some ways the most important point, you're sort of violating the first principle of expectations management of central banking. So the modern theory of central banking inflation targeting is essentially revolves around the idea that the central bank communicates to the public that it has an inflation target, let's say 2%. But it also communicates that two things. One is that it's confident that it has the tools to overcome inflation. And secondly, that it's absolutely determined to use those tools to achieve its objective. And the theory is if the central bank communicates that and backs up that message with the appropriate action, just think of the Fed for a moment, what the Fed's done the last few years, then it should work. But if the central bank says, no, we don't actually believe in that theory, therefore you, the public, should validate your deflationary expectations, you're essentially validating deflation and making it self-perpetual. Second thing that follows from that is that if the central bank doesn't believe that it has the tools, then it obviously won't use the tools. It won't take aggressive action. So if you look, for example, at the Bank of Japan when Governor Sheard stepped down, since the financial crisis broke out in September 2008, it had expanded its balance sheet by about 50%. The Bank of England had expanded its balance sheet by about 330%. The Fed at the time was maybe 280, now it's about 360. The Bank of Japan had been the least, even the ECB had expanded its balance sheet about 110%. So the Bank of Japan was the least aggressive central bank. So to me, the Kuroda coming in and saying basically, he didn't actually throw Shirakawa under the bus, but in some sense he did, because he said, I'm the central banker, this is my job, I can do it. And importantly, he didn't put it this way, but what follows is structural reform and supply side reform. Ultimately, that's the stuff that raises real living standards in the economy. That's the stuff that's ultimately important. But that's not my job. And I can do my job without the structural reform happening. So in other words, what Abenomics has done is sort of disconnect the reflation agenda, ending deflation, from the structural reform agenda. They're both there, but one is not held to be a necessary condition of the other. One is not held hostage to the other. So I think that's the really significant thing. Kuroda has now backed up that change in message with pretty radical action. The 4th of April, and it's sort of so far so good. And I'll come back in a minute to whether I think it's actually going to work or not, what I think needs to happen. But so far so good. I'm pretty supportive of what Mr. Kuroda has done. By the way, I don't know if anyone has seen one interesting thing is to say, gee, how is Governor Shirakawa taking all of this? And he's been very good in the sense that he's done what like an ex-president should do. An ex-central banker has gone away and sort of disappeared from view. But he did pop up yesterday when the BIS published I think it was yesterday, maybe it was late last week, published a volume from a conference which was probably September of last year. And this may have been floating around, I haven't seen it until I saw it today. Which sort of sets out Shirakawa's retrospective on what he's learned as a central banker. And for the sort of Bank of Japan watchers and monetary policy wonks around the table, it's a really quite a good piece of thought. I still disagree with him, but it is a very interesting piece that he's written. And read that alongside the speech that Kuroda gave about 2 weeks ago at the LSE, which was titled How to Overcome Deflation. And it's a real sort of contrast, but we can get into that. But what about the third arrow? As I said, I've been less animated by the third arrow. I know some like Richard, I think over the years, has put a lot of emphasis on structural reform. I've got nothing against structural reform. I've got nothing against supply side reform. But it's hard, it's difficult, it takes time to pay off. And I've always focused on the sort of what I perceive to be the relatively dysfunctional bit of the Japanese economy, the bit that should be amenable to fixing, which is the monetary policy bit with deflation. But let me just say something about the third arrow. And I think this is probably pretty conventional. It's more business as usual. It reminds me of, you mentioned that I've been in Japan a long time. I served on a couple of shindikai back in the 1990s, Keizai Shindikai. There's a whole cottage industry in Japan, which revolves around Kasumigaseki and Nagatacho, which churns out these structural reform reports. You go back to the Maekawa report in the 1980s, you go to Hosokawa in the Iowa report in 1992, I think it was, where the 1992 report, Hiraiwa being at the time the chairman of the Keigai Ring, essentially said it was a deregulation thrust, and it said we should end any regulation which is economic. So we should have total economic deregulation. The only regulations that we should keep should be ones that have some sort of social value, some social reason. And then you had Hashimoto, who did, if you remember well, I remember because I was on one of the Shindikai. It was a deliberation council, basically a bunch of talking heads, and they get around a table like this, but it's usually about 3 times as big, with all the bureaucrats lined up on the sides, and basically deliberates and comes up with weighty recommendations to the government. But Hashimoto did a lot of reform, the so-called Dai-Rokudai Kaikaku, 3 big reform buckets. One was financial deregulation, the Big Bang. Another one was administrative reform, which led to the filth reforms and postal privatization, push that came later on, social security reform, etc., etc. And then you get to Koizumi in 2001, and of course he launches into this big reform agenda. The point being that prime ministers coming in, and they do it with varying levels of sort of energy and intensity, but they always come in with a reform agenda and a lot of hullabaloo. Now, when I looked at the report that came out in June of last year, what struck me was it was almost like there were 2 Abes. There was the Mr. Abe who, on the reflation side, on grabbing the Bank of Japan by the scruff of the neck, had clarity, I believe, the right, had insight, and had sort of courage, and was not about to brook any nonsense. Shook the Bank of Japan up, and here we go. But when it came to the structural reform agenda, it looked like he just reverted to type. It looked like this report had come out of the usual, run around Kasumigaseki, each ministry comes up with its sort of few pages, laundry list. No kind of coherence, no real vision, just the usual sort of mush that comes out of that machine. Sorry, I'm perhaps being a little bit too derogatory. So it seemed to gloriously miss the point. But let me come back to that. So let me now say, okay, will all of this succeed? Well, I've sort of already said on the structural reform side, some progress may be made, but I don't have very high hopes there. On the reflation side, on the ending deflation side, although it's difficult to fault Kuroda and the Bank of Japan, if I try, I can. And my position here from the very beginning is a couple of points. One is, from day one, so when I started thinking about this and writing about this a year and a half ago now, my first point was to say, look, this can be done. But it's no mean feat to take an economy that's been in 15 or 20 years of deflation, and deflationary psychology is sort of hardwired or softwired into the mindset of all of the actors in the economy. And essentially, dislodge those deflationary expectations, raise them, let's say 2 to 2.5%, and then re-anchor them. It's one thing for Volcker in the late 70s, early 80s, to use monetary policy, basically tightening monetary policy, to throw the economy into recession and squeeze inflation out of the system. That's theoretically actually pretty easy. It takes some political gumption, and it probably takes somebody at your back protecting you, like Ronald Reagan, but you can do it. But it's totally another thing to take an economy where deflation is sort of embedded in the system, dislodge that deflation, raise inflation expectations, and re-anchor them. I think it can be done, but the way I put it is, for Kuroda to become to deflation what Volcker was to double-digit inflation, he essentially has to be Dr. Strangelove. In the sense that he has to convince people that, in some sense, he's mad. Mad in the sense that he actually believes this. He has the tools, and he is absolutely committed to using them. And that means potentially stepping on a lot of toes. For example, one thing that I said to policymakers, and I wrote this in my early report, if I was, and I wrote this before he was appointed, that, okay, what would you do if you were the new Bank of Japan governor? And what I said is, well, the first thing, you have to send the message. You have to say, you have to throw Shirakawa under the bus, and you have to say, I believe I can do this. And then you have to back it up with really, really radical action. And what I said was a dramatic expansion of the balance sheet. But it's not just size, it's content. What quantitative easing does is essentially rely on what economists jargonize as the portfolio rebalance effect. You have to change the portfolios in the economy. Well, if you're trying to do that, the best way to do it is to change them as radically dollar for dollar as you can. So, for example, the Bank of Japan, what I suggested was buy a dramatic amount of risk assets and buy foreign bonds. That would be foreign exchange intervention. Now, the moment if you mention that to any Japanese opinion leader, policymaker, whatever, they say, couldn't do that. That is buy foreign bonds. Why not? Well, the US Treasury wouldn't let us. To which I say, well, the last time I looked, the US Treasury, with all due respect, didn't accept US money. And to state it very bluntly, it's the following reason. Been very suspicious from day one that the fiscal hawks are actually driving all of this. And when I see in Japan fiscal hawks driving policy, it usually is telling me we're setting ourselves up for policy failure, with all due respect for my friends at the Ministry of Finance. Now, why do I say the fiscal hawks were driving things? I see Abenomics, in fact, if you check the public record, you can verify this, as essentially, first of all, it predated Abe. Now, that's probably the best way to put it. Abenomics, as a policy mix, came before Abe. What do I mean by that? Well, it was in the consumption tax legislation. So I've argued that my suspicion is that Abenomics, what passes for Abenomics, is to a large extent, not completely, but to a large extent, kind of Trojan horse for the fiscal hawks to push through the consumption tax credits. Consumption tax just last week went up from 5% to 8%. Now, why do I say that? Well, if you go back to Prime Minister Noda, remember, Prime Minister Noda was only there for a year, former Minister of Finance. But he made his whole political raison d'etre to pass the consumption tax legislation. Now, notwithstanding the fact that the Japanese economy was in deflation, notwithstanding the fact that it was coming out of the 3/11 tragedy and real GDP had fallen dramatically again. So that was like, hold on a minute, you're going to now double the consumption tax in a deflating economy, etc., etc. And of course, the answer was, well, okay, you have a point. So, in order to get the consumption tax through, we write into it a condition that policies be in place that produce the expectation over the fiscal year 11 to 20 decade nominal GDP growth of 3% on average, comprising 2% real growth and 1% positive deflator. In other words, now, time out. What was the previous 10-year average for those variables? Real GDP had been averaging 0.8. So you're going to lift real GDP through various policy measures as a pretext for hiking the consumption tax, doubling the consumption tax. You're going to raise that 1.2 percentage points a year. But deflation had been running on average in the decade of minus 1.3. You're going to take that to plus 1. So you're going to raise, if you like, the GDP level inflation rate, or deflation rate, to basically 2.3, let's call it 2.5%. And nominal GDP had been running at about minus 0.6, and you're going to make about 3. So you're going to raise nominal GDP about 2.5, about 3.5%. This is a very, and now you might say, hold on, Paul, why do you even take any notice of that? Isn't that ridiculous? Yeah, but hold on a minute. That was written into the consumption tax legislation as the condition for the government to actually go ahead and raise the consumption tax. So that's not just that's a different kind of narrative here. Now, what was the background to that? I think there are a couple of things going on. One was the Eurozone fiscal crisis. The fiscal hawks in Japan saw the Eurozone fiscal crisis. Maybe there are three things. The fiscal hawks in Japan saw the Eurozone fiscal crisis and said, this is our opportunity to convince the broader polity in Japan and must hike the consumption tax. Secondly, I think was 311. I think that was a much bigger shock and wake-up call to Japan than many foreigners realized, because for us it was a news story. I don't think people living outside Japan realized what a potential shock to Japan this was. For example, probably the biggest element, the shock to corporate investment in Japan. If you close down the nuclear power industry and take out 30% of energy supply, which was supposed to go to 50, you have the worst earthquake in Japan's recorded history, but it happens in the wrong place. And you experience these tsunami that can wash over the coastal areas. You have a really good set of arguments for not locating very important plant equipment inside Japan around the coast. So I think that was a structural break in Japan, where if all things had been equal, corporate investment would have been on an even more declining trend. And then you had the strong yen coming on top of things. So I think there was an element in Abenomics of the sort of crisis management. We've really got to do something. Focused attention. But I think it was, in my mind, driven most strategically or maybe tactically by the fiscal hawks. Another element was the once in a 5-year chance to actually get somebody into the Bank of Japan who would do what the government wanted it to do. And I think that my sense of Shirakawa, brilliant man, but he, there was an element of he completely kind of overstepped, if you like. He didn't quite read the signals around him that at some point, you're not supposed to go off with your little theories that it's all the government's fault and don't look at monetary policy. He was really setting himself to be, to be cut down at the knees. And so I think they found in Mr. Kuroda somebody who espoused a different theory. I think it's a better theory. But also don't forget Mr. Kuroda is from the Ministry of Finance, is the number 2, was the number 2. And I think there was another hidden narrative here, which was the Ministry of Finance positioning itself to regain control, or at least bring the Bank of Japan under its sphere of influence. There having been 3 Bank of Japan governor appointments, and if the Ministry of Finance had not got its foot back in the door this time, I'm talking about the political economist now, but if it had not got its foot back in the door with his governorship, at a time at which government debt was getting bigger and bigger and bigger mountain, it would have established a precedent of 4 5-year terms in a row to go to a Bank of Japan insider, and the Ministry of Finance doesn't get a look. So I think that was a dynamic as well. Let me just add to the last point, come back to structural reform. Now that I've put those numbers out there, that purportedly Abenomics is trying to lift, let's just focus now on real growth. Real growth from 0.8 to 1 to 2%. Well, actually it's not 0.8 because potential growth is shrinking in Japan all the time. Cabinet Office, Bank of Japan now reckons it to be about 0.5%. And it's probably going to get lower and lower over time. So that 1.2 is becoming bigger and bigger over time. If you look at the Cabinet Office, they put out an estimation that if you break down that 0.8 real growth, average in the last 10 years, economists do growth accounting, as you probably know. Contribution of capital, well, that's about 0.5% capital accumulation. Sorry, 0.5 percentage points. Total factor productivity is about 0.6 percentage points, so that gets you 1.1. But the labour force, the growth of the labour force, even the last 10 years, was a drag of 0.3 percentage points, which gets you down at 0.8. So here's my bottom line on structural reform, and I'll be a little bit provocative if I haven't already been provocative enough, which is that when I read that report, I said, well, hold on a minute. How are you going to raise potential growth in Japan, stepwise, at least 1.5%, maybe even more? Well, you could, and I think we could have a debate about this, you can do the deregulation, so try to get the productivity improvements. But as someone who lived in Japan for 17 years, it doesn't strike me that Japan is an inefficiency or an efficiency basket case. That there's an incredible amount of low-hanging fruit that if you just pluck, you get a productivity improvement. Maybe I'm missing something. So I don't think you get an enormous amount from that, but if you just get it, you really do something about it. We know that capital accumulation is difficult to pure economy like Japan, but capital accumulation to be driving, a large amount of growth. It's delivering about 0.5%. That's probably where it stays. So just logically, from a growth accounting perspective, the thing is, again, if your aim is to raise real growth, and by the way, Abenomics doesn't talk in terms of per capita. This is always an issue that comes up. Well, in per capita terms, what's the big deal? Japan's per capita is not too bad. True, that's another discussion. But the fact of the matter is, Abenomics is in terms of aggregate GDP. So the only way you do that, in my view, is to seriously increase labour inputs. How do you do that? Well, there's 3 ways. Increase labour force participation, the aged and particularly the female. Now, there is a paragraph or 2 in the Abenomics report, June of last year, on that issue, and since then, actually Mr. Abe's embraced the idea of Economist and has been talking a lot about that. That will get you some distance, but I believe what you also need to do, if you're serious about increasing the labour force, is also the increase in population, or at least to break on the population decline. The numbers here, by the way, are pretty dramatic. Japan's population peaked, I think it was about 129 million a couple of years back. The official sort of projections, the reverse projections, has the population falling below 100 million by 2046. And by about 2060, it gets to about 85, 86 million. There's one forecast, and this is not tongue-in-cheek, this is just bureaucrats running the numbers, where you have higher mortality and lower fertility. I think the projection goes out to about 2,120 or something, and I think it's about 36 million of the Japanese population goes down. You're not going to grow the economy if you're shrinking the population and the labour force. So they need dramatic policies to turn around the fertility rate. And the fertility rate has actually come up. Gone to about 1.26, I think it was 2005. It's back up to about 1.41 as of 2012. So something's going on where it's actually just come up a little bit. But really trying to give that a push. Get it up to 2, 2.2, whatever. How are you going to do that? You're going to need serious tax and social policy changes. You're going to need to spend a lot of money. I think that money would be well spent because it will repay itself in the future productivity of the economy. But try getting those kind of game-changing measures through the Minister of Finance and Diet. Good luck. I don't think it's going to happen. But the third thing you really need is immigration. And let's just say that that is off the table and a rather taboo subject. But if you're serious, again, if you're serious about saying, okay, if someone's given me the job of raising Japan's real potential growth dramatically, I have any tools at my disposal here. What am I going to do? I wouldn't write a 150-page structural reform report. I'd write a couple of pages that said, we are going to have a concerted policy to increase labour force participation, to raise the fertility rate, and to embrace immigration. About one of those topics is on the agenda, about the other 2 are not on the agenda. I think I probably said enough to get you guys going as well.
Excellent.